Investing in an election year? Are we doomed? Well, here's what you need to know. Hi, everybody. My name's Aiden Murphy. I'm a financial advisor with Sentinel Financial Group. And in today's video, I'll be sharing with you some important historical data on election year market performance and what it means to your portfolio. I think you're going to like what you see, so I hope this works to put some minds at ease, subdue some of the inevitable panic, and provide some perspective for you guys. So, investing during an election year, let's get into it. So, just to set the scene, every time there's an election year, financial services industry, specifically us guys in the advisory and wealth management space, brace for impact as clients and curious investors tune into Fox, CNN, MSNBC, and the like, drink the Kool-Aid, and panic over their portfolios, leading them to call asking, should I move to cash? Am I in for it this year? Etc. Well, let's just calm down and take a peek at the numbers. First, how about this article and supporting metrics from American Century that discusses from 1976 to 2023 that U.S. stocks have averaged 10% and bonds 7% in presidential election years, even with the obvious 2008 global financial crisis in the mix. Now, if that doesn't convince you, take a look at First Trust's analysis. The S&P 500 in past years has seen more positive returns than negative in these election years. Here, we'll see that the S&P 500 index performance during presidential election years has historically provided positive gains for stocks. Specifically, 19 of 23 election years the S&P has been around for, we've had positive returns. When a Democrat was elected, we've averaged 7.6%. When a Republican was elected, that's 15.3%. And when we went from a Democrat to a Democrat in office, we averaged 11%. And when we went from Democrat to a new Republican in office, we averaged 12.9%. And regardless, in all election years, we averaged 11.28 returns on the S&P 500, 11.28% since 1928. See, I understand, but I don't understand people's nature during election years expecting the worst when not a single data point necessarily would indicate as such. As a matter of fact, look at this. It's midterm elections that see the drawdown as opposed to presidential elections. Negative 8%, negative 10%, negative 26%, negative 22%, negative 18%. Meanwhile, election years average 11.28% total market returns. Wild stuff. Yes, in the past, we've talked about how there's a range of 12 to 14% in volatility on average, from the peak of the market in any given year to the bottom. You're typically going to see that type of volatility on average. But in its entirety, election years end up favorably. Well, those are the numbers. Sure, past performance is no indication or guarantee of future results, but this ought to allow you to sleep as tight as Sleepy Joe or be as outrageously confident in your investments as the Orange Man, regardless of who wins the 2024 presidential election. Stay the course, stay invested, and stay tuned in for more. Send me a DM today if you need to firm up your portfolio in preparation, or if you just have any questions. Be sure to follow along on all platforms, YouTube, LinkedIn, Instagram. Thanks for tuning in. Catch you guys later.